Money. Money.
And I brought in for a money chat a few weeks ago, the down payment protection program, but I wanted to bring it back in because I know some of you are popping in. You don't get to hear all of our shows. And I just think this is a really, really great thing to be able to utilize for a homeowner or for a seller. So are you a seller listening to the show today and not getting the traffic that you want on your home? Or to my buyers, a shout out, if you're sitting on the fence worried about what the real estate market may do, and then possibly miss out on an opportunity because you don't act? Well, I've got a solution for both of you. To my seller, market your home as a down payment protected home. This will protect the buyers on the market. If it drops, their down payment is protected and insured. And for my buyers, you can have down payment protection on your loan if for some reason the market drops. So you have home insurance, you have car insurance, you may even pay for cell phone insurance, just to list a few. Why not now have down payment insurance? So how the program works, it's available for single family homes and condos. It must be a primary residence. There is a maximum loan amount. So the jumbo market, we can't do a down payment protection program for jumbo. So it's for conforming limits as well as the high balance conforming limits. So in King, Pierce, and Snohomish County, the conforming high loan minute limits are $667,000. You want to check online to see other counties. Now, the coverage term is for 7 years with a 1-year claim waiting period. So you may ask, well, what if I plan on keeping my home for longer than 7 years? Well, that's a really good question. But let me tell you what, if the market did drop in that 7-year period, here's what I would do if I had down payment protection and insurance that's going to pay me my down payment back. I would list my home, get that down payment, and go buy a better home for a better deal. Now you have the down payment that you need to get into that more expensive home. So when the market recovers, because it always does, now you've made out really well. So the coverage for the lost down payment is 20% of the purchase price, or $200,000, whichever is less. So if you're coming in with a 5% down payment, it's going to protect your 5% down payment, but up to 20% or $200,000, the lower of the two. Now, how they determine when you sell your home if the market is dropped to pay out that policy and that claim is through the Federal Housing Finance Agency House Price Index. So that's what's determined to be to use at that time. So an example would be a purchase price $800,000, down payment $160,000, which would be 20%. Let's say that you sell your home 5 years down the road, and the market is $750,000 for that home, which would be a $50,000 loss on that property. Now the FHFA index lost $60,000, so as the homeowner, you would receive your $50,000. Is exactly what your property dropped, and you're recovered that $50,000 in of the down payment of the $160,000 you came in with. So there's an investment for a policy just like any other investment, but you're paying $10 a month probably for your cell phone insurance. On this program, maybe $25 to $50 a month, depending on what the interest rates are doing. This is just for example purposes of close. I need to put that disclosure out there. Or you can pay it up front. And this is what you can do if you're a seller to make your home down payment protected for a buyer that comes in. Wow, that just sounds really great in this market, because your home is going to stand out like no other home on the market to have this unique thing for potential buyers coming in now that we've seen a shift in the market. So here's what it would look like for you. The low end, 30 basis points or 30% on the loan amount of whatever the buyer is borrowing. So the more they're borrowing, the more expensive the higher down payment, the more expensive it is. The lower the down payment, the less expensive the insurance is, up to a maximum of 70% of the loan amount. So the maximum would be 70%. So on a $650,000 loan amount, that would be $4,550. I mean, right now as a seller, you're probably maybe paying that in concessions for going towards a buyer's closing cost, possibly. So here's my tag on that. Here's my tag on the program. You are no longer limited to market circumstances. So I just think it's a really great thing, and I wanted to bring it back in here because Keelan and I were mortgage experts. So sometimes we like to bring into Money Chat a little mortgage stuff, right?
Right.
Thanks for your
That's my
buy-in
2
there,
cents.
Keelan.
Yeah, right.
And coming up next on the Money Hour, what are the top deal killers and inspections and appraisals, and how to prep your home for sale success? Carrie Foley with Berkshire Hathaway Home Services Northwest Real Estate right here at 11:50 a.m. KKNW after the short break.